sort of thing. In terms of when it will start that next bull run, So I would favor a short-term move up maybe on Bitcoin in the next day or a few days, and then I think the resumption of the downtrend continues. So if we go to the charts here, let's take a look at these fun charts. Basically, what you have is you have a macro pattern, and I'll do a little bit of teaching for everyone out there. So a macro pattern is basically the bigger pattern, and then you have a micro pattern, which is the pattern inside of the bigger pattern. And what you can see here is basically we have, let me get my trend lines up here. You basically have the bigger pattern. This is your bigger pattern down here, and then sideways, right? This is in spirit of what we would refer to as a bearish pattern, in spirit of bear flag. And we've now broken down again, and now you're forming a new bear flag in spirit of bear flag pattern, right? So you got a macro bear with a micro bear. So you have two bears, which is never a good thing, right? So that's a little bit scary. But what I said before is that short term, I'm a little bit bullish, and this is getting a little bit more wacky. But look at this green candle here, and then look at this mini micro. And this is getting weird, right, Frankie? So you have a macro pattern, you have a micro pattern, and then inside of the micro pattern, you have this mini micro, which is a little bit of bull, right? So you have the up move and then the sideways consolidation. So what this tells me is that the market's anticipating maybe a quick move up, but then the bigger micro pattern and the macro pattern will likely take it back down. So I guess to summarize this, you'd look for a very short term, maybe a next couple days bounce in crypto, maybe if we're lucky back to this trend line that was broken. So this would be kind of a retrace to the breakdown line right here. And then I think we roll over and the resumption of the bearish pattern takes us down to here, which is the 2017 level. And then ultimately, I honestly am still in the camp that we're still headed even lower, probably 12, 13,000 at minimum on Bitcoin. And just to be clear, that's kind of my best case scenario is 12 to 13,000. My worst case would be like 3,500 or so. So hopefully it's the best case, but again, as a trader, we always have to prepare for the best and the worst case. You just can't kind of stick your head in the sand and say, oh, I'm only going to believe in the best case. As a trader, you have to mitigate risk, so you have to prepare for the potential for the worst case. For me, it would be much, much lower. Like honestly, 10,000 would be very good in terms of washing out a lot of the weaker hands. So for instance, I think there's a lot of investors, and if you look at Bitcoin right now, we just went from 69,000 to 17.5, and I still didn't get the sense, and you might agree with this, I don't know, but I didn't get the sense that people were like giving up on Bitcoin, right? And in a bear market, that's the kicker, right? If you go back to 2009 when the stock market bottomed at like 6,600 on the S&P or whatever it was like people just didn't even open up their portfolios anymore. They were like, I'm not even going near stocks anymore. But you don't have that in crypto yet, which to me says you got to go lower in this bear market if it's a true bear market. And so I'm in the camp that 12, 13,000 is the high end target. But in all fairness, it's very likely that the powers that be, the psychological breaking point is probably that 10,000 level. So I would say that you probably have to go even below that to really flush out all of the weaker hands before you get that final, bottom being put in. And I would just point to this is that I think we could agree that the crypto market in the last 12, 18 months, very similar to the dot-com bubble, if people read up on the dot-com bubble. And remember, Amazon lost 95% of its value. It went from, I think at the time, $115 to like $6.50. And then it went to 3,500. Like think about from $6 to 3,500, what type of X that is. That's like hundreds of, 100X or whatever it is.
Yeah.
So you have to think that, Bitcoin could easily go down 95%, and then it could go up the same amount as Amazon if it proves itself to be that digital gold. So for me, I wouldn't give up on it myself. I still think that the fiat currency issue is not going away. The Fed right now is putting up that strong front. Oh, we're going to stop printing. Well, yeah, it's easy for them to say that when unemployment is like 3-4%, right? But ask me this, when unemployment goes to 10 or 15%, are they still going to be like, no, we're not going to print? They're going to print again. Come on. So I think that's the kicker, is that you just look at that aspect. And I think you have enough big money starting, like there's big names that are investing in Bitcoin to the point where I really do think there is a future for Bitcoin, even if it gets flushed out. And honestly, the key for investors is to just remember it should just be a portion of your asset allocation. It shouldn't be everything. You never want to have all your eggs in one basket. I know you preach this, but like, you should have your stock portfolio, your crypto portfolio, your real estate portfolio, your this, your that, your gold. And this way, if by chance it does end up being worthless, it sucks, but it shouldn't break you. Honestly, I've never met an emotional investor who ended up making a lot of money long term, right? So that's the kicker. And just always remember that, folks, is that emotion is your worst enemy. You should never fall in love with anything. I mean, listen, a human, okay, fall in love with your significant other. But when it comes to investing, you have to be always very robotic, because inevitably when you put all your eggs in a basket, maybe the first one works out, you make a fortune, but eventually you're going to hit one that's wrong, and you can't let that wipe you out. So, you definitely, it's a scary thing. I always say to people, like, no investment that you're making is going to love you back. It is just an investment, right? I mean, you can't say Shiba Inu loves you. Yet, right. So why would you love it? Love something that can love you back, and no asset you're investing in is going to love you back. So definitely diversifying among multiple assets is the main one. But I'm the same way. Like in my portfolios that I manage, it's about being long certain things, but also being short certain things. Like going into the stock split on Tesla, I was short going into this morning, right? And looking for that pullback. That, you had this run up into that stock split that it had today, and then you just figure, okay, it's run up, it's going to sell off, and it did. And then I also had long positions in stocks as well to kind of compensate. And luckily, you get that drop, and then you get sometimes that pop in the other names as well. But if the market tanked, at least Tesla would drop, and maybe the others would drop, and it would kind of hedge your downside. So I think long short is the way to go. Some people use options. That's fine. I've never been a fan of that, because I always look at it like this, is like, if you're hedging with options, you're inevitably giving up some of your alpha, right? So, if you're batting, let's say you're batting 80% as a trader, so 8 out of every 10 you win. Why would you ever make it so that it turns out to be that you're only making 600 out of every $1,000 that you could do by hedging? So if you're right enough, I mean, listen, if you're a 50-50 trader, then yes, hedging's the way to go. If you have the skills, if you have the ability to read charts, then hedging with options to me doesn't make sense. So that's true, but let's be fair, no retail investor ever uses it for that. They always try to do the get rich quick scheme, which is to hit a home run on the option and make 300, 400, 500% in a short amount of time. But you're right, big money uses it to kind of protect themselves. Absolutely. Not really much. I more stick to the bigger commodities, oil, natural gas, gold, silver, like those type of things, mainly because those are there's a lot of ETFs that track those things. So it has lots of volume and lots of abilities, and it's easier to read those charts. But you could honestly, trade those as well. Just make sure, again, that the volume in whatever commodity is enough to kind of make the determination of the chart. I want to show you something, Frankie, because I want to let's just prove my point here. So here's today's, let me show my chart in a second here. Let's do it right here, right? All right, so here's the S&P today, right? So the S&P today opened here, it ran up, which was a beautiful run, and then it pulled back. And there was one trade that I took today that was just, it was just classic charting, right? So take a look here. You have this line here, and then look at how the market pulled back, and then you bounced right there. So all I did was I grabbed the S&P right there, and there's your little gain. Classic day trade. But like this could be a chart of Bitcoin intraday, and it would be no different. You would do the same thing. It broke out, retraced to the support line. You can see the pivot and the pivot, and then boom. And then it actually did it again here before rallying sharply into the end of the day. And then, of course, you don't get this in crypto, but there's something called a gap fill. This will be a big resistance if we go there tomorrow on the S&P. So again, the point being is that it's the beauty of the charts is that you're basically trading. Millions of investors are buying and selling in here. And it could be Bitcoin, it could be S&P, it could be Microsoft, Tesla. It's all the same. It's all the same human emotion going on. Greed and fear, greed and fear. And yeah, man, it's cool stuff. So let's take a look, if you don't mind. Like, what the heck?
Yeah,
Let's
of course.
take a look. So
Of
So the
course.
first thing I'm seeing right here is yes, it is. I mean, it is holding support. I think this would be probably the proper trend line to kind of keep an eye on. So you're right. As long as it holds this trend line, that's fine. If this breaks, then that's where trouble starts. But certainly, you had a big wide range candle here. This is kind of not the greatest inside bar because it retraced the entire thing. Those are always a little bit troublesome. But the bottom line is, it looks okay to me. I'm not sure if it's the most amazing chart in the world, but I think that as long as it holds this trend line, it's fine to stay long. I think it's fine. But again, just watch in case that breaks. I mean, if you look at past cycles, it's anything but a V shape. And the reason is bear markets tend to be in a position where you get people so scared that they're scared to rush back in, right? So it takes a while. So if we go back to like the 2017 highs here, and then the bear market, you can see we even had this long period and then kind of this. And then you can see it for a long time, it almost went sideways before starting back up again. So you got to think that that's going to be the same sort of thing. In terms of when it will start that next bull run, you know, the common theme would be like the bear markets usually bottom out 12 to 18 months after the top. So if the top was November, this November to the following like March, April, May. But my fear again is that you have to be aware that with the Fed not printing, it makes me worried that this bear market could be a little bit longer. But I think in the very least, you say 12 to 18 months before the bottom is in. At least we're getting close to November, so that's good. But that's why I still think there's more downside at minimum to get us to November or through November. Yeah. I mean, I'm in the camp where this is the first bear market where the Fed's not printing money. So in the very least, we should do 80 to 85%. And then that's the one fear, is that it could be a little bit worse because the Fed's not printing. Now, if the Fed starts printing again, that wouldn't change potentially my view on it. So I think that's something I'm paying attention to. I also think regulation in the crypto space is unbelievably important to have before we get that bottom. So what I'm even thinking is we might get regulatory kind of notes out about what they're going to do with the altcoins, and that could cause a flush, but that could be the bottoming flush where you buy into it. Because I think there's a lot of big money that's saying, hey, listen, we can't put $1 billion in crypto even though we want to, because we don't know the framework. What's the framework? How is the SEC going to regulate? But once they know that, they may feel more comfortable. So I think, again, I think you got to look at 80, 85% at minimum, maybe a little bit more, but watch for the Fed starting to print again, and then also watch for regulation to finally be figured out and the market to know. I think, like, for me, I've been through enough bear markets in my stock career, commodity career, and now crypto, where bear markets usually, they remember, just like markets tend to go higher than any of us think, they also tend to go further to the downside because greed and fear are just so pervasive and powerful emotions. So for me, I look at crypto, and yeah, it's been a nasty decline, but it's not that kind of flush out where you're seeing, the Twitter sphere calling for like zero Bitcoin. And I think that's something that I want to see, to the point where you're seeing a lot of the retail crowd just kind of throw in the towel. And then I'll start to actually get bullish, more bullish on it. But by the way, and just one other thing, it doesn't mean that I'm going to wait to 12 to 13,000 to buy a little Bitcoin. So as it comes into the teens, I actually picked up a little at that 19,000 handle. But it's just kind of, I'm going to dollar cost average from there on down. And so I might be still buying if it gets to 5,000, but the idea is that you don't know where the exact low is and you don't want to miss the bear market. And I agree with you that we're closer to the lows, the bottom, than not at this point. So, I still think we're going to go down 12, 13, maybe even lower. But I think because none of us know, I don't want to miss the next bull market. I'm a long-term bull on Bitcoin. So you just kind of dip your toe in the water, as it kind of comes lower at that point.